Picture this scenario. You might need funds abroad in your preferred currency to cover your living expenses. Or perhaps you've got some sales proceeds from a property back in India and you're thinking of investing it elsewhere, especially in a foreign country. Then how are you going to do that? Mostly by transferring money from India to abroad. Well, that's not easy because transferring Indian income to abroad has its own challenges. That's why to make it easy for you, we've divided this video into 6 chapters where we'll discuss each and every step. So to start with, how much can you transfer, the documents required for the transfer, a detailed analysis of these documents, the documents required to submit evidence of source of funds, extra documentation required to transfer funds from NRO to the overseas account, and finally, liberalized remittance scheme. But before starting with the first chapter, let's understand what is the current scenario. How it works is that many folks use their NRO account as a sort of financial collector for their income in India, while they keep all their investment moves through the NRE account. But why? Because the NRE account offers some sweet benefits when it comes to flexibility and repatriation. And here's the icing on the cake. Preferential rates of interest, lower remittance charges, and tax treatment that's more favorable in your NRE account. Who wouldn't want that, right? Now, here's a little bit of history for you. Before 2012, the transfer of funds from NRO to NRE accounts wasn't allowed. But starting from May 7, 2012, the rules changed a bit and now it's possible under certain conditions. Since the funds in your NRE account are like free birds, meaning they're freely repatriable and the interest earned is tax-free. That's because transferring money from your NRO to NRE account is considered as an overseas remittance. But there are some hoops to jump through. So if you're thinking about making this move, hang on tight because there are a few conditions you'll have to pay attention to. And that made us start this book which contains several of these chapters. So let's start with the first chapter. How much can you transfer? So here's the deal. The Reserve Bank of India allows you to transfer funds from your NRO to your NRE account. But there's a cap. You can move up to $1 million in a single financial year. And here's the kicker. Any portion of that $1 million that you don't use, you can't carry it over to the next year. It's a use it or lose it situation. The documents required for this transfer. Now, what's the paperwork you'll need for this transaction? You'll need one, a declaration under FEMA, which is the Foreign Exchange Management Act. This should state that you're entitled to the transfer under FEMA rules. It's like your golden ticket. Next, Form 15CA. This one's for the Income Tax Department. It's basically a heads up that you're going to make this transfer. Next, Form 15CB. This is a certificate from the Chartered Accountant confirming that you've cleared all your tax liabilities before the transfer. It's like your financial green light. This is followed by proof. You'll need evidence of the source of funds you're moving from your NRO to your NRE account. Your bank will certify this. And last but not the least, you'll need to jot down the reasons for making this transfer. It's like a little, why am I doing any of this note for your records? So there you have it, folks. It may seem like you're jumping through a lot of hoops, but these steps ensure that everything's above board, especially when you're moving your money abroad. Get a glance at the documentation. Now, I'm sure you're wondering, why on earth there's such a laundry list of documents required for this transfer? It can feel a little overwhelming, but trust me, it's all about keeping things legal and in order. As we're dealing with some important regulations here, FEMA, or the Foreign Exchange Management Act of 1999, and the good old income tax rules. These rules ensure that the country's foreign exchange is secure and that your funds come from approved sources in India with the right taxes paid. Alright, let's talk about all the documents in detail. First is the FEMA declaration. What's that all about? It's basically your word of honor. You're declaring that this transaction complies with FEMA provisions and you're giving the bank the green light to proceed. The bank usually has a standard format for this declaration, so you can pick it up and just submit it to them. Easy peasy lemon squeezy. Now Form 15CA. That's an income tax form and it's submitted online. But don't worry, it's not as complex as it looks. It has 4 sections, parts A, B, C and D. These are for the income chargeable to tax in India and you'll only need to fill them out in specific cases. Part A, if the total remittances during the financial year don't exceed 5 lakh rupees. Part B, if the total remittances do exceed 5 lakh rupees and you've obtained an order or certificate under sections 195.2, 195.3 or 197 from the assessing officer. Part C, if the total remittances exceed 5 lakh rupees and you have a certificate in form number 15CB from an accountant. Part D, this one's for all the remittances that aren't chargeable to tax. So you see, it might look like a lot, but most of it's actually pretty straightforward. Keep these forms in order and your fund transfer will be smooth sailing. The online submission process is given below. 1. You need to log into the e-filing portal of your income tax with your credentials. Number 2. Select e-file, then file income tax forms and then choose 15CA as applicable. Number 3. Enter the required details. Scroll down and e-verify the return. Number 4. Once verified, a confirmation message appears. You can download the same for your records. The signed copy can be given to the bank. Alright, now let's talk about Form 15CB. It's like the companion to Form 15CA and it's something your friendly neighborhood chartered accountant can help you with. So here's the lowdown. Form 15CB is a form that your chartered accountant who is registered with the income tax e-filing portal can take care of. It's part of the whole process just like Form 15CA. The nitty-gritty of Form 15CB includes 1. Details regarding payment. This form spells out all the details about the payment you're making to a non-resident. It's like a financial fingerprint of the transaction. Number 2. Compliance with Section 195. Now, this is a big deal. It's all about making sure you're following Section 195 of the Income Tax Act, which deals with the deduction of taxes for non-residents. Number 3. Details of TDS deducted or tax paid. You'll also need to include the information about any tax deducted at source or TDS or taxes paid for this transaction. It's all about keeping things transparent. Number 4. Validity of double tax avoidance agreement. And last but not the least, you need to confirm the validity of the DTAA or the Double Tax Avoidance Agreement. This agreement helps prevent double taxation of the same income in 2 different countries. So there you have it. Form 15CB is like a financial GPS for your transaction. It makes sure that everything's on track. Your chartered accountant will help you navigate this form, and once it's all sorted, you can submit the hard copy to your bank. Alright, we've covered all the forms and regulations and all that fun stuff, but let's not forget about the evidence and the reasons behind this financial move. Evidence and reasons for the transfer. First off, we've got the evidence of source. It's all about proving where this money is coming from. It could be from the sale of securities, dividends, selling property or anything else. If these transactions are going through the bank itself can confirm these sources. And then we've got the reason for transfer. This is like the why in your financial story. You'll need it to let everyone know if you plan to move these funds out of India or if you're keeping them snug in your NRE account for those sweet tax advantages and other reasons. So in a nutshell, it's all about connecting the dots, showing where the money is coming from, why it's going and where it's going. Remember, transparency is the key in the financial world. Alright, let's talk about the specific sources of these funds. You might have a bunch of financial assets held in your NRO account and you're eyeing the possibility of moving them to your NRE account. But here's the catch. The source of these funds should line up with the amount you're planning to transfer. Think of it like a puzzle. Every piece has to fit just right. So what could these sources of funds be and what kind of evidence can you provide for them? So here's a snapshot of all the proofs that you can see in your screen right now. Also, I would strongly suggest you to screenshot the same so that it comes in handy in future. Remember, having the right evidence for your source of funds is crucial to make this financial jigsaw puzzle come together smoothly. So gather your documents and you'll be on your way to successful fund transfers. How to transfer funds from NRO to your overseas account. Let's talk about a pretty common scenario. You've got your hands on some cash. It could be your share of the ancestral property, or perhaps you've sold a property you invested in many years ago. Now, you're thinking about moving these funds from your NRO to your overseas account. Here's the deal. Transferring funds from your NRO to NRE accounts follows pretty much the same rules we've been talking about. You need to follow all those terms and conditions and submit all those documents that we've already covered. But here's an extra piece of the puzzle that you'll need. It's called Form A2. Think of it as your golden ticket to foreign exchange remittance. It's a form that you can get from your bank and submitting it is pretty much a breeze. So whether it's that ancestral property money or the proceeds from your old property investment, if you're looking to move those funds back to your home country, just remember the rules we've discussed and don't forget that trusty Form A2. With the right paperwork, it's a smooth ride. Till now, we've covered all the paperwork of transferring money from an NRO to an NRE or an overseas account. But wait, there's more to the story. The liberalized remittance scheme. We're all aware of the fact that the RBI allows you to transfer up to $1 million in a single financial year. But hey, life throws us challenges, right? Sometimes you might have special circumstances that require you to go beyond the specified limit for overseas remittance. In those cases, you can approach the Reserve Bank of India for approval through your bank. Just keep in mind that this may take a little bit of extra time, but if you have a legitimate reason, it is worth all the effort. So there you have it, a little bit of financial wisdom to make your money move smarter and smoother. That is the Liberalized Remittance Scheme, or LRS. This scheme is a game changer, and I'll tell you why. LRS allows resident individuals to make overseas remittances up to $250,000 US per financial year. Yes, you heard that right. $250,000. And it's not just for one type of transaction. You can make it for a combination of permissible current or capital account transactions. So here's a little bit of history for you. LRS made its debut on February 4th, 2004 with a limit of $25,000. But over time it's evolved and now it's at a cool $250,000. That's quite the upgrade. So what can you use LRS for? Well, it's pretty versatile. You can use it for private visits to any country except Bhutan and Nepal, emigration, taking care of your expenses of your close relatives abroad, funding your studies overseas, and more. And here's a cool bonus. Even your relatives can make use of this facility to send you funds if needed. Of course, they'll need to follow the usual procedure of overseas remittance, and they should have maintained their account for at least a year in the concerned bank. The bank will also verify the source of funds through bank statements and through income tax assessment orders. So whether it's your own financial adventures or helping out your loved ones abroad, LRS is a financial superhero you'll always want to keep in mind. Alright folks, we've covered a lot today, and I hope it's been a helpful journey through the world of NRE, NRO and overseas accounts. And now let's summarize on what we've discussed till now. Here's a quick rundown. 1. NRO account is used as a financial collector for Indian income. Number 2. Investment is mostly carried through the NRE account. Number 3. RBI allows you to transfer up to $1 million US in a single financial year, and this amount can't be carried forward to the next year. Number 4. To transfer money from the NRE to the NRO account, you'll need the following documents. Firstly, FEMA's declaration. Secondly, Form 15CA that's required by the Income Tax Department. Thirdly, Form 15CB, a certificate from the Chartered Accountant. Fourthly, evidence of the source of funds, the bank will certify this. And fifthly, the reasons for transfer. Number 5, if you want to transfer money from the NRO to an overseas account, then you'll require all the mentioned documents, and along with it, you'll need Form A2. And number 6, lastly, we spoke about the Liberalized Remittance Scheme that allows all resident individuals to make overseas remittances of up to $250,000 US per financial year. And this can be used for a combination of permissible current or capital account transactions. So yes, that's all for today, and if you found this video interesting, then do hit the subscribe button, and you can check out our other video on how to transfer money from the NRO or overseas account to an NRO account. Until then, see you next time.